You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back one final time for our on-demand broadcast week here. Yes, it is time, once again, for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are binging these days. Remember, if you just listen to the Vol Views, you're missing out on pretty much a dozen other shows, close to it. I've lost count these days. So wherever you're listening to this, if you're on the on-demand side, make sure you're getting the full network, A. And B, if you like what you hear, keep rating and reviewing. We've all seen there are a legion, a plethora of new people discovering the world of options and volatility every week for obvious reasons. So they need a place to turn for quality, reliable content that isn't going to rip them off or send them in some crazy direction. They're going to lose all their money. So we think we fill that niche. We've been around for, 15 years now, so I think we're doing a little something right. So if you like what you hear, keep rating and reviewing. Of course, if you need more in your ear holes, you don't want your broadcast week to end after Volatility Views. You want exclusive shows like Options Oddities, our pro Q&As. You want to get live access to this show and every other show that we do throughout the week. It's a good time. We saw a lot of people joining up this week. You have good timing because it's almost giveaway time. It's coming up for the April Pro Trading Crate. Once the April is concluded, we put all your names in a hat, and one of you pro members will be the lucky winner of a bespoke, custom Options Insider Pro Trading Crate. I'm looking at all this cool stuff here right now in the corner of the studio. It is still a mountain. We have chipped away at it a little bit. We've given you guys a lot of stuff, but there's still a lot more here to go out to you guys. So where do you guys go if you want to join that partay? Theoptionsinsider.com/pro is the place to go, and you can join all of our fun stuff, ask questions for this and every other show we do live instantaneously, pro Q&As, and a whole bunch more. And let's see who's joining us on the Volatility Views show today. First, let's go out to the dark and stormy shores of Maine, where we are joined once again from his lone tower, where he scans the waterways for the clam pirates and occasionally looks at some volatility. He is the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show, sir. How goes the battle against clam piracy?
The battle... Wow, that was a pretty rousing intro. I'm pretty.
Hey, I'm hopped up on Mountain Dew over here. I'm raring to go.
You are hopped up on Mountain Dew. The clam pirates are not out today because it is so windy. They would be blown right off of their boats. It is a windy. It is a blustery. It is. It is actually the exact dark and stormy day that you have in your mind of the fortress that is my castle.
So the day that I always say, the dark and stormy shores of Maine, the way I always describe it is literally true today. So I'm glad to see.
Today is that day.
I'm glad to see what I have spoken into the ether has come to fruition now. So there we go. Yeah. The power that is the network. And also joining us this week for the first time here in 2021. It's been a while since we've chatted with this person. Holding down the MIAX hot seat this week, our old friend, Mr. Jem KARSAN, the founder and senior managing partner over there at Volatility Advisors. Jem, welcome back to the show, sir. It has been too long.
Yeah, I mean, it's not 2021 anymore. It's 2022. But yes, the first.
Did I say? See, look, I told you I'm hopped up on Mountain Dew. I'm all crazy here today. So yes, for the first time in 2022. I know you did do a hit with our pro members back in February. Did the pro Q&A there. So we have talked, but this is the first time on the network proper. So obviously a lot has happened in the world of volatility in the year that is now 2022. So maybe let's start there. We haven't talked to you in a bit, Mr. Jem. Tell us about the year that's been for you from a vol perspective. Obviously, we got out of the gate pretty hot. Things were pretty frothy. Valuations were a little bit of concern. We had the Fed looming on the horizon. Things started selling off early in the year. Then, of course, Putin took it all to the next level with his invasion in February. Then the Fed adding some fuel to the fire. Now earnings mixing it all up in there, and inflation. It's been quite the volatility cocktail so far this year, Mr. Jem. So how does it taste to you? What have you been sipping on this year from a vol perspective?
Yeah, so end of the year, beginning of the year, flows were, particularly strong. I've talked about this at length before, but, given a positive year in the market, there's a lot of reinvestment going on there at the beginning of the year. That's what drives seasonality with a very low, with very low volume during that period, not to mention all of the Vaughn and Sean buybacks given all the hedging that was going on in the market. So all of that was to be expected. The give back we got in Feb was kind of what you'd expect off of that, Jan into Feb. So none of that was surprising. Honestly, what you would have expected in March, as you get through March expiration is some type of bottoming. But obviously, as things were bottoming in late Feb, we got an invasion, which kind of put a damper on kind of all that buyback that happens during that period going into March quarterly expiration, up until the last second. And it built really this contango, this backwardation in the vol curve, particularly because there's also a March Fed meeting right after that March expiration. And all of that, backwardation and skew as well in the indexes really led to this massive 10% rally that we saw in the week of March OPEX. That was completely options and vol-centric driven flows. That was the type of counter trend rally that you saw during the 2020 election, right? The 2016 election, other similar event vols. When that curve is backed up, people own long dated skew and vol, short dated, and the natural decay is of Vana and VOMA are such that delta buyback and vol selling just can cascade. So we finally got that in March. That was a very vol-centric event. But again, very structural. And I think what was very telling is that it didn't have legs. And most of those other events I mentioned, Brexit included, you have these kind of, the worst things come to pass if the event passes. So it doesn't matter. And you get those buybacks. But structurally, what's happening here on the macro scene is just too strong, right? Particularly the Fed acceleration here and the inflationary push that we're seeing because of the Russia invasion on the commodity side. The Fed's essentially writing calls at this point. So that March rally, which you'd kind of expect to have legs into May, gave way pretty quickly. And so this downtrend is now pretty well entrenched. Even though vol is relatively well supplied on the downside, so you're getting a lot of skew flattening in the indexes in particular. Every time down, people are hedged. We have record Sentiment is in line with March 2009 readings. I mean, it's the highest readings since March 2009. People are very bearish. People are hedged up for good reason, but that ultimately means when the world is hedged, even if the news is really bad macro, that it's hard to get those a direct move down. So you're getting a lot of these bounce backs on decaying of expiring options, and so you're getting a lot more than maybe usually you'd have in a downtrend of these Vana and Charm kind of spikes back in stair steps down. And I think that's what you should continue to expect for the foreseeable future. There is still some work to do on the downside here, but it's going to be stair steps. It's not going to be a crash. The pain trade is market down, vol down for much of the world. That's long equities and ultimately trying to hedge with options. So there you go.
I love it.
For 2022. So
Anti-hedging talk and Vanna and Charm. So Jem is back with us here on the show today, which is always fun. All right, the table is set for the year that has been. Of course, we've established it's 2022. Now it's time to get to this week. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, some of all trading and trending and analysis and unusual activity, all sorts of perspectives. And we asked you folks yesterday on the Option Block show, we said, hey, is this rally have some legs or is it really a dead cat bounce? And I think somewhere around 75% of you, quick flash poll we did during the Option Block, said you thought it was a dead cat bounce. At least right now in the near term, that seems to have been the right move, fade that rally, because coming into showtime today, we are seeing a heck of a lot of red back on the screen. The S&P off over 2%, about 2.15%. The NASDAQ off about 2.4% when we kicked off the show. The Dow off about 1.5%. So the Dow playing the laggard out there today. That means all of our vol friends are a little bit frothier now than they were a week ago. Spikes at about a 31.25 when we kicked off the show. That puts it up a little over 5, about 5.25 points from where it was at this time last week. VIX cash about a 30.75. So back up over the 30 handle. We might need a return of the logins. We shall see. We'll have to have the live chat vote if they want our guest star back. That's up a little over 5, about 5.05 points to be exact from this time last week. VVIX getting frothy again, back to about 120. Of course, if we're talking VVIX, we have to also throw in the V-Spikes, a.k.a. the Viking, which, of course, if you folks want to find it on your platform, it's just V-Spike, V-S-P-K-E. That is the vol of vol for spikes. That's at about a 144, almost 145. Right now, it's up about 2 points from where it was this time last week. So a lot to unpack. Let's go around the horn the way we started. Let's go out to the dark and stormy shores of Maine. Mr. Rock Lobster, sir, what's lighting up your tape and the tape of Volman? And also, do you want a return of our special guest star, Mr. Loggins, sir?
I think it's appropriate that Mr. Loggins.
The chat is giving a resounding vote for Mr. Loggins. I may have to go see if I can find him.
It has to be.
I think he's been hanging out in our green room since last week, so I think I can find him.
Yeah, once you have Jam throwing around those like secondary Greeks and stuff like that, the whole show gets it gets so much higher, All
right, since you're talking higher, we got to go to the danger zone. You talk, I'll go see if I can find Mr. Loggins in the green room.
Okay, like in the old days, I would remember, okay, I'm long SPX puts and I'm long futures and I'm getting smoked. I think if I had to take what Jam was saying and like bring it down to the level of the average trading human, you're like, oh, I think I'm hedged, but from a delta point of view, your puts just are not performing like you had expected because the vols are kind of dying, which I think is a problem. Like once VIX gets to 30, I think index vol kind of sucks. I mean, I think butterflies and stuff like that you kind of fake the skew curve a little bit and get some, like you can get performance for a small price when the vol gets that high. So I'm actually closing some SPY put flies as I speak. I'm trying to anyway.
Say now we have officially been joined. I found him in the green room. We have officially been joined by Mr. Loggins, sir.
All right. Well, you know what? I gotta defer to the. I have to defer to the power. Go ahead. Yeah. So that's essentially the trade. Just when we're kind of doing this, I put on basically like short VIX via puts, and then buy put flies and SPY when we have the big rallies. I kind of work into that so I don't get just so blasted away when you don't get quite the huge performance on the downside. So, and then the VIX puts kind of, I try to basically, the trade is I put the flies on into the big rallies, try to make some money on the flies. And if I make enough money on the flies, then I own all the VIX puts for free and I end up with a big basket of VIX puts. And maybe it's a big payday or not if vol comes down after the Fed meeting on the 4th, because we don't know what's going to happen, right? So, like yesterday, everything was hunky-dory. Facebook saved the market, and we're going to have a recession. So everything that was bad was good again. Recession normally was bad for stocks, but now it's good because the Fed jumps in. Now today, consumer spending's good. Oh, Fed's going to be in the market heavily and, cut rates or jack rates again. Then you had the Chinese saying they're going to spend money, so commodities kind of got a little pop. Again, every day, and then you have your 2% move, which is like the next step. So VIX is 30. That's a 30-day volatility, roughly. And we're expecting the market to gyrate quite a bit. Okay, you should expect a 2% move every day because that's kind of, ball is up there. And certainly somebody expects the market to move 2% a day or roughly 2% a day. So that's why I think you can trade the swings like that, which for a little nimble retail trader like me now, it's you can pick your spot and you can have a little more fun that way. I don't think it's going to be over, until the Fed says something. So I think that's part of the reason why you could have a 2% move today. And VIX it's up, but it's not going crazy, right? The market's kind of priced this 2% level, whatever that is. They've priced the straddle, 30-day straddle at a level, and they're kind of happy with that until the Fed speaks. So, if I'm in the SPX trading it, okay, you're basically trading an earnings cycle, so to speak, where the Fed is the earnings announcement, vol gets bid, straddle gets bid to the time, and then it's going to kind of trade in roughly that. The money straddle will roughly trade there until the Fed is done saying what they're saying. It will either be really good or really bad. You'll get some kind of move, and volatility should be maybe lower by Thursday, Friday next week. Until then, you get kind of this pre-earnings gyration stuff. And it's not really earnings, but of course it's an event on a calendar, and the calendar date sets the ball. And that's what we got. And I don't think it's going to change very much. I think there's some opportunities to buy some decent stocks, stuff like that. But other than that, you're kind of trading the big swings. So that's what I'm writing about for Option Pit today. And I don't think it's going to change until May 5th. So that's where we are. But it does bring us to the danger zone. That's all I'm going to say. It does bring us to.
Yes, it does bring us. By the way, I do love our pro members. They're such a fun bunch in the chat. They're actually mad. They are mad that I would even dare to ask them if we needed the logins. They're like, how could you even think we didn't? So I love it. I love it. They wanted the logins when we were down at 18. They want logins every week. So yeah, there we go. So I apologize to our chat.
They can't have logins every week.
I know that's not special.
Logins is the danger zone only.
Lately, we've been hanging out in a lot of danger zones, so you could thank Mr. Putin.
Zone in 2020.
Thank Mr. Putin and Mr. Powell, the two P's out there, for keeping us nice.
They're helping.
Yes,
I have to say
they're doing their darndest. Yes, I love our chat. The temerity to not have the logins. Mr. Jem, you may be confused. I don't think Mr. Loggins visited us the last time you were on, sir. So yes, we are technically in the danger zone now. So don't be alarmed. I think we'll all make it through together. But what's been lighting up your tape this week? Obviously, a lot of earnings on the docket, a lot more Eastern European mixing into the mix, as well as, of course, we have the Fed next week. What's been lighting up your tape from a vol perspective this week?
Yeah, I think the point that we're going into a eventful this coming Wednesday, particularly with vol very well supplied. We're talking about a $58 event straddle, 1 day event straddle for that event. The reality is, because of the backwardation and because how cheap that event vol already is, you're likely to see what you usually see in these events, which is some quick kind of rally back into that event. Now, it may only last into not even by the end of the day, right? But I think, from here or lower levels, likely to see some rally on next Wednesday. Now, that I think is going to be sold, just like all of these other kind of counter trend rallies have been sold. So that's something that I'd be watching very, very carefully. And that is just a structural. It's just vol is getting too cheap, and people are getting it for more and more of it for cheaper and cheaper relative to the risks out there. As you move forward, given the backwardation. So that's one thing that we're looking at very closely, kind of just at the broad macro level from a more equity specific level. Obviously, the earnings that we had the last several days, we've seen fairly outsized moves, from kind of the generals. Many of them are getting in the process of getting shot. I think that's kind of telling. To the broad picture, the Fed is in no way about to kind of step away from this acceleration now. I don't know how much you guys know about the history of Powell background, but he's definitely a believer in go big, go early when you're solving and trying to deal with a problem. I think, we're going to get at least 50 basis points, if not 75, in the next three consecutive Fed meetings here. So more importantly, the taper is going to be about $95 billion a month in taper. Like, that is a massive amount of liquidity coming off the table. The Fed's not only going to keep writing calls, but they're really removing the kind of the bid underneath the market. And it's not something that they can reverse going into the election cycle. This is, if the market comes down, we're all used to the Fed coming to save us. Not sure that's possible. So continued trend down, stair steps, like I said, because of the vol supply, but no bueno.
No bueno indeed. Looks like our chat agrees with you here, Jem. We have Speculunius. That's quite the handle there. Speculunius says, so a relief rally next week as the FOC event passes and short-term expensive puts decay. Seems the market could bounce a little bit even with the hawkish Fed. That's what you were saying for next week as well there, Jem. But yeah, obviously maybe buyer beware onto all of those rallies as we saw yesterday. There are still a lot of lingering structural issues out there. Speaking of lingering structural issues, let's see if those are being expressed right now in the volatility surface. Let's go out to the land of the futures. And again, when we kicked off the show, we obviously had the futures a little bit juicy, a little bit rich. They were not quite backward. They were flirting with it. They were kind of like flat right as we were coming in, but still juicy, obviously. That May future is up about almost 3.25 points from where it was this time last week, and the June future up about 2.5 points. So that front portion of the vol surface getting pretty jacked out there. Mr. Rock Lobster, what are your thoughts on what we're seeing out there in the volatility surface this week, sir?
I believe Mr. Jam kind of called out. I'm just pulling up my sheet right now, and look at that. Okay, so this is what I think is weird. It's a weird vol surface. Is that possible to have a weird vol surface?
Every week is a weird vol surface, sir. It's just a question of degree.
So I remember a time when like VIX was 30, the cash was 30, and the VIX cash would be spiking. And you have this kind of deep backwardation, like the rest of the vols was not there. The futures were basically much, much lower, right? Because you had such a sharp short-term pop and vol. And you get this huge backwardated curve in front of the vols, real expensive. But like when you go back now, all the vols all the way out are pretty high. And I think that was what Jan was speaking to. Like, people are already kind of hedged and they're buying all this stuff, and it's making vol high. Or at least the liquidity provider is going to let it float if nobody's selling it to them, right? Since they're not in the business of making people happy, they're in the business of kind of managing inventory, making themselves happy. So at least that's what I used to do. So when you look at it like this, it's actually kind of a flattish curve for as high as VIX is, I think. Like it's very, very, so that just says like there's definitely bid for, I just think there's more vol buyers out there, and that's kind of what it looks like. And I think that's partly too, like the flatter the curve in my mind, the more unstable VIX cash is up or down. The market's kind of pricing, they don't know what the hell's going on, kind of. And you could have this kind of sharp move. So you're not like this, it's not this deep backwardation where it's like, woo, we're in a short term, and we're in kind of this longer term period of vol staying high. So anyway, that's my observation with the curve, but it's an oddly flat 30 VIX curve. That's my observation for this. And I think it has everything to do with with all the macro stuff going on, and the Fed, is they really going to jump on the gas pedal and, raise rates and try to crush this inflation thing? A year too late, but what the heck, they're going to give it a try.
Yeah, that was my first thought as well when I looked at this. Is like, you're right. Oddly flat, I think, is a good descriptor for it. I expected that front portion maybe be a little bit juicier, maybe be a little bit more backward than it is. This weird kind of, obviously it's frothy, but you're right. It is still kind of oddly flat. I think that's a good description for it as we're hanging out here around a 30, and clearly Mr. Loggins is back, so we're all in the danger zone. Mr. Jem, same question for you. Do you agree with that descriptor? You think this volatility term structure is oddly flat, or is this kind of what you were expecting come into Showtime?
Well, I think long-term vol is actually relatively cheap. It's an interesting kind of thing. Some people who've been in the vol space for some time will be able to kind of remember some of this. But in 2007, long-term 10-year variance swaps traded down to 17, or 16, 17. That was actually probably more in 06 than 07. But the point is, it got ridiculously low, like longer than long-term averages. By 2009, it was trading 60, which is obviously absurd. So point here is, at these levels, long-term vol, given the risks of an unwind, it's still actually quite cheap, given how much people are short. That said, when you start looking at kind of this medium term, kind of 6 month, whatever, it's that stuff is actually quite expensive. So there are opportunities on calendars broadly. That said, I think so. I do think it's fairly backward for how cheap longer term vol is given the macro landscape right now. The one kind of contrary thing I would say is we're trading nominal products here. We haven't had to look at, really in the vol space, really ever, the realities of real asset values versus nominal. And if you start looking at 10% inflation per annum, you're getting essentially a 10%, 1 year forward, 10% discount on the value of things nominally every year. That really reduces downside volatility. You compound that for a couple of years, long-term skew and long-term vol on nominal products naturally should be dampened a bit. So I think that's like kind of the one contrary argument we're kind of thinking about here when we think about macro landscape and skew and vol. And interestingly, into a lot of these declines, we are seeing suppression of skew longer dated. So even though the vol variance at the money may be relatively cheap longer dated, that skew should probably be flattening a bit. So, and some things to noodle on when you start thinking about term structure here.
Yeah, I know you're much more of a skew guy than even a vol futures guy. You kind of mentioned earlier in the show about everyone being hedged, kind of causing some of these bounces. I know the last time you were on back in December, you were angry that too many people were hedging. They needed to stop hedging out there in the market. You kind of mentioned just now some of the skew evolutions. Anything else catching your eye out there right now from an overall skew perspective, Jim?
Yeah, honestly, we're really, like I was saying, we've seen this for some time, but you'd expect it to have a break at some point. But skew is very much compressing into every drop, and that really is a function of this overwhelming short position. There are plenty of people short this market, plenty of people hedged. This is not a market that is not expecting a decline. This is a world that is, for every, really fundamentally a lot of negative flows coming in, yet continues to go lower. So I think that really cuts the tail, and so there's a lot of trades that you can do, as you know, where you can sell skew to buy vol. So it's easy to hedge right now, as long as that keeps going on. And the reality is that is part of what's leading to these quick, like I said before, quick bounce backs and stair steps down. So on the index level, that's definitely nothing has changed there, and I would expect that to continue to be the case until something on the macro level changes, or we find ourselves a good 400 points or 350 points lower. Around 38.50 is kind of an important kind of support level that also kind of, in terms of valuations, gets us to a place where you would think there'd be some support there, and maybe we can build off of that as time moves forward here in the next year.
Let's get on out to the volatility product side of the space. Let's start with the options. Get on out to Spikes land. They're still kind of waiting and seeing in the Spikes options land for the return of our four-way trader out there. Remember, you put on that four-way, he sold the puts to buy the calls. It worked out pretty well. He took it off at a pretty opportune time, and then we're kind of waiting for him to come back in. I don't think he's going to be putting on a new upside bias four-way when we're up here north of 30 in Spikes. He might want to wait for that to retrace. So, hey, we'll have to look and see at some of our OI and VIX if they're taking some of those off. But it seems like right now, and for the last couple of weeks, upside has been all the rage. So right now, still waiting. It's like the big positions out there in Spikes options. July 20s and the AUG 20s, maybe a bit of a calendar there, I should say. And then May 50s, June 25 puts, and July 25 calls. Getting on out to VIX options land, you might think a day like today, we're off over 2% in most of the major indices. Things are lighting it up. Usually red on the index screen means a lot of paper in VIX land. If you looked at the numbers today, in fact, I had to re-rack them myself just to make sure something wasn't wrong. You'd think it was a lazy Tuesday in the dog days of August and nobody was around. Everybody was off at the beach because there's only 166,000 contracts on the tape right now in VIX land. That is a whole heck of a lot of nothing. So, yeah, very quiet day out there in VIX land. The ADV, given we have some paper this week, that ADV has been coming off quite a bit this week, finally firming up a little bit again. It's back up to 468,000 contracts. That's up about 12,000. I mean, that's better than losing 50,000 a week like it has been for the last few weeks out there. Let's break down the top positions. What are the big size open positions right now in VIX options? Well, let's find out. By the way, the top 10 listeners, 70-30 calls over puts. We have swung a little bit. I believe it was 90-10 last week. So read into that what you will. A couple more puts making their way into the top 10 this week. Only cost you 107,000 contracts to break into the top 10 in VIX options right now. That gets you to the June 35s. And I want to get your thoughts on this in a little bit, Jem, as well, because these upside calls have been lighting it up like crazy over the last couple of months. And I'm talking extreme upside. 35s is just the beginning. We're getting way above this. Number 9, our first of 3 puts in the top 10, 110,000 of the June 21 puts. Number 8, 110,000 as well of the May 40s. Now we're getting a little bit more optimistic. Number 7, here we go, 115,000 of the May 75s. Gotta love those. Number 6, 125,000 of the November 70s. Number 5, back to the puts, 129,000 of the May 20 puts. Number 4, our final of 3 puts here in the top 10, 135,000 of the May 25 puts. Then it's all calls the rest of the way, 138,000 of the May 35s, 154,000 of the May 30s, and still the reigning number 1 spot, pretty much 250,000 exactly yet again, the October 75s. So everybody who's wondering, hey, did this guy or guys who are out here on this 75 strike, did they take any off this week? The answer is decidedly no. We've been asking that question for a while now, and they seem unwilling to budge. The last time we got north of 30 in VIX and spikes, they also didn't take any off. I think they might have added some more on. So, yeah, this is an interesting position to watch. I'm curious for you, Jem, outside of the paper we're seeing here. We have seen an explosion, to put it mildly, of interest in, let's just put it, 75 and above strikes in VIX. Obviously, we have 70s and 75s open for size, but we've seen people going out there to the June pars, the 110s, the SEP 120s, trading 10, 20,000 at a time. It seems like there's a groundswell of interest in these. Now, the usual use case was, of course, some sort of disaster hedge against like a credit portfolio. That could still be the case, but we're also hearing a lot of people talking about, in fact, we talked about that on our Advisors Option Show a little bit this month and last month with Mr. Matt from Oratz, our Oracle New Hampshire friend, and he's been actually putting some of these on in his own portfolio. He views them as analogous to teeny kind of garbage puts in the S&P, whereas if you get a decent pop, you don't even have to get close to the strike, and you start seeing, that vol effect, that skew effect kick in, these little garbage calls can actually outperform. I'm curious if you've looked at these, Jem, if you've noticed this paper going up, and what are your thoughts on this, let's call it par and above explosion of activity in VIX?
Yeah, I mean, that's the stuff you want to be long. Ultimately, if we get something really, look, there's structural positioning, and what that matters for 99% of the distribution. But that in this world there is no doubt a massive leptokurtic tail when things break. That tail can be driven by a Chinese invasion of Taiwan, right? Which is not seems unthinkable, but is much more probable than I think people realize. We're talking about potential global bifurcation on a macro scale. So we all know what those risks are, but positioning is seeing to it that vol is relatively well contained because of broad hedging on the kind of index level, et cetera. That said, it's not unthinkable for a nuclear bomb to be set off in Ukraine, right? It's not unthinkable for China to, like I said, invade Taiwan. So these things are things that we would normally think as relatively low probability things that are now in the, probably the high single digits. And so those tails are margin puts or margin calls, depending on how you look at it, right? They are, things that, we used to have a saying in the pits, sell a cab, drive a cab, right? There's a reason for that. You don't sell those little units because a nickel can very easily become $20. There's very little upside and almost unlimited upside. Vol VIX calls is ultimately the most convex place to be on the distribution. So that's the stuff, that's the reinsurance. That's the stuff you own a bit extra that picks up a tremendous amount of edge relative to maybe, let's say, SPX skew. You can sell SPX skew and really buy that extra amount of that real convexity. And that's really what what people should be doing. Those buyers are, they're big funds that have massive, on the back of March 2020 performance, on the back of all the geopolitical fears here that have seen massive inflows. They're going to continue to be buyers in that space. Again, remember, there's $50 trillion of domestic equities. There's $100 trillion of global equities and about $450 trillion of global assets that need to be hedged. If everything was to be hedged, it's impossible, right? So, what you're seeing is just, in the billions of dollars of protection. I would never ever be short that tail.
Yeah, I remember when I first walked into the SPX pit and saw all those guys in the back who were all the teeny put sellers, and lo and behold, they changed jackets every 3 to 6 months because they kept blowing out. But for some reason, people kept backing those guys. I never understood it. An intriguing way to make or indeed lose lots of money out there. These crappy little calls probably fall in that same bucket. Speaking of the action, let's break down the rest of the week we got out here. Like I said, today, not a heck of a lot. $1.60 on the tape. The most active contract today, the May 24 puts, with about 21,000 of those. Let's go out to yesterday. A little bit more paper on the tape in VIX options. 509,000 contracts on the tape, so obviously beating the ADV yesterday. The big trade yesterday, 62,400 the May 24 puts, 38,000 the May 23 puts, 34,000 of the May 22 puts. Put Palooza, listeners. Number 4, we got 33,000 of the May 25 puts. Got to go all the way down to number 5, 28,000 of the May 35. Someone did put on some calls, but way down at the bottom of the top 5 for yesterday. So Wednesday, kind of an active day, but not the most active day. 512,000 contracts on the tape. The big trade on Wednesday, about 37,000 of the May 40s. Getting back into that realm. 35,000 for number 2 of the May 25 puts. Number 3, 31,000 of the May 30 calls. Number 4, 21,000 of the July 22 puts. And rounding out the top 5 on Wednesday, 21,000 as well of the May 27 puts. Tuesday, getting a little bit more paper on the tape, 591,000 contracts. The big dog on Tuesday, 28, almost 29,000 of the May 23 puts, followed by 28,000 of the May 21 puts, 21,000 of the May 19 puts, 20,001 of the May 35s, and rounding out the top 5 on Tuesday, 19,000 of the May 28s. Monday was the big dog this week, 646,000 contracts on the tape. No days threatening a million this week, given the action we saw. That's kind of interesting. 46,000 contracts for the May 40s was the big dog on Monday, followed by 30,000 exactly. Never see that. Going back to what we were just talking about, 30,000 exactly of the Nove 120s going up on Monday. So folks certainly have a lot of axes to grind on that far portion of the VIX curve right now, listeners. 28,000 of the June 20 puts, 23,000 for number 4 of the April 30s expiring this week, so those are in the weeklies, and then 20,000 as well of the May 18 puts. Mr. Rocklofster, any thoughts on the VIX paper, or perhaps lack thereof, we're seeing out there today? And then your thoughts, as I mentioned to Jem there, about the continued prevalence of these size out-of-the-money calls. Look on Monday, 30,000 of the Nove 120s. How many of those were you buying, sir?
Not many. I have to say not many. But as far as all this stuff out there, I can understand why folks are buying that stuff, right? So what we have told users or listeners before is VIX doesn't have to go to 100. Just the vol can just explode and all that stuff just goes sky high. So from looking at all that long-term stuff, I understand why they haven't sold it yet, right? Because the Fed's still Fedding and the Russians are still Russianing, and all this stuff that's all these macro events that are keeping things let's just call it difficult. All that junk is actually easy to pay for. Finding another way of, like, if you trade and okay, I have this huge hedge, and now how to find the ways to pay for it. Just scalping and all kinds of other stuff that you can do when you have a long vol position when you have 2% moves per day. So it doesn't surprise me that people are coming for the junk, and I think as Jam was saying, people are a little smarter than they used to be, and maybe the global financial crisis kind of scared people into just selling all that junk. But now some funds actually go out and buy it and figure out ways to trade it. So it's not surprising me that stuff has popped. It's just, what is it going to take for the market to sell off a bunch more and have some of all this scaredy stuff realized? The only thing I would say is I think the longer the Russians are in Ukraine and all of the, for me, trading volatility, pressure was always, once you could form a tunnel around the vol, you felt like, you could move. There was kind of limits on whatever the activity was. But this Ukraine-Russian thing is still continually pressing. The rhetoric is still, it kind of ratchets up every week. It doesn't really pull back. I guess the Chinese, saying they're going to spend some money and all that, was a temporary relief. But the situation, it really doesn't feel like it's cooling. It's in a very a high state of unrest. And there hasn't been a stalemate. It's a stalemate, and everybody's kind of digging in a little harder. And I think that also is another reason why could be interest in the tails, as a just in case thing. But it doesn't surprise me that there's still action in all of that stuff. I haven't bought any 120 calls, but I think that upside is relatively easy to finance. Trading and scalping other other products around it. If that's mostly I try to do like theta neutral strategies like that. Okay, I buy some junk and I try to figure out a way to pay for it, and then every once in a while the junk becomes worth a lot of money. And that's certainly a way to approach this right now, especially when the vol decides to take that next leg up. For whatever reason, it'll be a relatively easy exit. It's just one of those trades where you actually don't want it to make money, to be quite honest, because it's too freaky to think about. So anyway, that's where I see, and we're kind of in this sort of this grinding state of market. And another thing too is it's like what kind of upside do we have now? Like, are we getting back to 4,800? We get these 2% rallies and 3% rallies and stuff like that, but we're really going back to all-time highs for any particular length of time. So I think like any kind of decent upside, or sustained, feels like it's starting to leave, at least in the SPX for a while, until some of these other issues resolve themselves. So you got the weird macro upside blast, but I don't think you have as much sustained upside in SPX, as we felt we had last year.
Well, let's keep on rolling. We're just through VIX, and we're already coming up against it here. A lot of vol to talk about this week. But, Mr. Jem, you haven't joined us, like I said, since December of last year. We've seen some new additions to the vol trading universe since your last appearance, including just in the last month or so. We saw the addition of some, I guess you can call them controversial products. We, of course, have SVIX, which is the new XIV, the new inverse vol product brought back after the Volmageddon wiped it off the table back in 2018. Now it's back in the flavor of SVIX. We also have UVIX, which is a new levered double VIX product. Have you had a chance to take a look at these? What are your thoughts on the return of inverse and levered VIX ETP, sir?
Yeah, there's a great, there's a place for them. I think there are, better products to trade and better ways to do it. But for your retail entity out there, reasonably decent place to kind of capture kind of some of that roll down, whatnot. Listen, everybody knows what happened to XIV, right? So it's usually you want to be selling insurance after the storm, right? I think we're not in 2017 here at vol levels. There are vol selling programs in this environment, given owning the tails, right? Given, if you have convexity, there are ways to capture this. So, I know short vol is a dirty word, but there are strategies out there to do it. And for your retail person who really can't kind of find the right ways to monetize it, those are products that serve a purpose. So it's good that I'm honestly surprised the SEC kind of let them back in. But I'm all for it. Again, I think the more products, the more flexibility. Again, big proponent of that. We live in a non-linear world, and the more that people can have access to non-linear products, the better.
Yeah, I think a lot of people were surprised that the SEC opened the door to allow these products to come back. They were deeply controversial. Even when they went live and we did a poll with our audience, we asked you guys, are you going to trade these? It was pretty much 50-50, yes and no. So, yeah, I was at the industry conference last week, my first in-person conference in quite some time, and we talked about these products, and they were certainly very controversial with the industry crowd. It seems like more so than on the retail crowd. With the retail side's like, yeah, we want all the products. On the industry side, they were there in 2018 when XIV blew up and took a lot of people with it, and they maybe don't want to go down that road again. So they're a little bit understandably cautious about these. Right now, though, they don't have much to be cautious about. Neither SVIX or UVIX are really lighting the world on fire. Their SVIX at about 11.25, and we came into the start of the show. It's pretty much close to that still right now, down about 1 3/4 points. You're talking paper, not a ton. The ADV is 172 contracts from an options perspective, obviously. And today, so far, we had a little bit less than 100. So not a lot to break down there. Same story in UVIX, was at about a 22 when we kicked off the show. Puts up a little over 4, about 4.3 points. The ADV a little bit stronger out there, 879. I know Andrew and the Meatball and others have said that they think UVIX is going to resonate more. For all the headlines that SVIX is getting, they think UVIX is going to resonate more as the double-levered product. And that certainly seems to be the case right now, at least from an options perspective. Nearly 1,000 a day versus not even 200 for SVIX. VXX, again, we're kind of coming up against it. We don't spend too much time on all these. VXX, we've talked about it a lot lately. What the heck is it anymore? Is it just a crazy closed-end fund that's just bouncing around on the whims of its own traders and users? Certainly not tracking the VIX much anymore. Is that about 27 when we kicked off the show, up about a point from this time last week? It's all about 67,000 contracts on the day. That ADV has continued to erode. It's down to 118,000. That's down 8,000 from this time last week. And in terms of, let's do a quick top 5 in VXX. Number 5, 31,000 of the May 17 puts. Number 4, 31,000 as well, the May 16 puts. Number 3, 34,000 of the June 15 puts. Number 2, 43,000 of the June 16 puts. And the number 1 size position open in VXX options right now, 49,000 of the May 18 puts. So everyone's still playing that fade game. They're waiting for Barclays to come out and say, hey, this thing's going back to normal, in which case all that premium, all that juice that has popped in there since they started going crazy, they hope will erode, and we'll see this stuff get back to a lower level because, again, it's all puts in the top 10. 10-0. In terms of action today, not a heck of a lot. The most active trade, about 3,000 of the April 26 halves going out today. UVXY, same story. 16 3/4, up about 2.5 points from where it was last show. Today, seen more paper, 233,000 contracts. The ADV, 294,000, up 42,000 from this time last week. So if you've been paying attention to UVXY, it's been moving all over the freaking place. From 12 up to 15 to 17, almost 18, back down again, 50. I mean, this thing's on a rocket ship up and down every day. So understandable that it's doing a lot of paper out there. Let's see, the top 5 positions in UVXY right now. Number 5, 13,000 of the June 10 puts. Number 4, 13, almost 14,000 of the April 14 half puts. These are expiring today. In fact, everything else is expiring today. 16,000 of the April 11 puts. 17,000 of the April 16 half calls. Those seem like they're on the docket there. And 19,000 of the April 12 half puts. Mr. Rock Lobster, we just broke down a lot of VIX ETPs in a short amount of time. Any thoughts on SVIX or UVIX or VXX or UVXY as you come into near the end of the show, sir?
Yeah, I'm still curious actually to the role the SEC actually plays when they let these products come back out after they crashed and blew up. Like what's your job? Your job is to be like,
they just give them the kids all the matches and say, hey, go play.
I think really that's, I personally, I think transparency in finance is better, derivative books and all that stuff. I think it should be much more transparent. That way you don't have everybody, the nasty surprises that everybody seems to think will happen eventually. But yeah, as far as those products go, I'm not touching VXX anymore. UVXY is just a short-term product when it kind of fits what I want from a decay profile point of view. But mostly it's just VIX and SPY now, just because it's not worth the weirdness anymore. It used to be like one of the greatest products. It was fun and it was reliably crappy, at least VXX was. But I'm actually kind of, I have not touched those other products at all, to be quite honest. So, and I'll probably just, I try to keep my window of products relatively small, and if they're interesting and they're relatively predictable in how they're going to perform, I'll trade them. But, I want to wait 6 months before I even look at the other ones, to be quite honest. Just doesn't, it won't interest me to see if they survive the next Volmageddon. Let's put it that way.
Yeah, that's interesting. I will say the consensus from that industry panel that I was a part of last week does seem like whether or not, they're obviously they're approved now, so they exist, but it does seem like a lot of the folks in the space would like to put, I'm not a huge additional regulation guy, but some additional, let's just say, roadblocks in place between your average retail trader and these products, particularly the inverse and levered ones, because people don't often understand what they're getting into, whether it's additional EULAs you have to click through, maybe applying. They seemed like they were open to applying options level 1, level 2, level 3 certification to products that obviously have inherent optionality to them. So it seemed like they were open to that idea as well. So I wouldn't be surprised if we start seeing more controls on the risk side coming in from the brokers in the wake of these products. But speaking of the wake, we got to get rolling. It is time for the most difficult, the most dangerous portion of the show. You can see our buddy Mr. Loggins. He's already gotten the heck out of Dodge. He's scared. He doesn't want to be around for this because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the volatility gods and see what they have in store for us for the coming week. And before we do that, really quickly, let me just pay off our question of the week. It is coming down to it right now. Got like an hour or so left, so maybe 2. So maybe you folks listening on the podcast side, you might have time to get in there, but it'll probably be done by the time the podcast is posted later today. We asked you at the beginning of this week, it's still true right now, we're back in the red in the SPX and SPY. How are you positioning in your broad market portfolio right now? I'll give you 4 choices. You're still long the S or SPY, you're just riding it out, or you're long SPY but with a put or some other type of hedge, or you're in cash waiting to BTFD, or you're in or moving to crypto. And right now, with a few hours left, it's been kind of tied most of the week, with the exception of crypto. No love for crypto. Only 6% for crypto. So right now, the leader is in cash, waiting to BTFD with 35.8%, followed by number 2. You're still long SPY in an SPX. You're kind of just riding this one out. 32, almost 33%, and about 25.5% for your long SPY or SPX, but with the put or some other hedge. If you haven't voted, add options, get in there. You got a few hours left. But we got to get down to business, listeners. That is, of course, the prognostication for the week to come. Right now, as we end the show, I should say, spikes still hanging out about 32.25. It's not a heck of a lot of evolution there. And VIX still at 30.75, actually. So I don't think either of them have budged. We were at both of those levels at the start of the show. So we haven't really budged much at all, which, again, is unusual, especially given where we're hanging out right now. I was leading the dance last week. I was feeling a lot more vol. I was 28.75. I was way above everybody else. And even that was not sufficient to be within our margin of victory list. It's got to be within a point to even talk about it. Got to be within 1/10 of a point to get that bullseye to actually win. I was not within either of those. So I was the closest. And then, let's see, Matt from MIAX was number 2 at 25.25. And then Mr. Meatball, 22. That's his favorite pick these days. So he was way far away. A lot of our, Unlimited tried to scum me for, I think you did that for Luigi, at 28.77. So thank you for that. Our audience scumming me all the time. A lot of other picks. He was like he was the closest out there. I don't see any other even higher than 28 handles. So again, we'll have our producers go through to make sure there are no outliers, listeners. But I see a lot of 25s and 26s and 22s. I don't see anything above 28 in your listener predictions. If you want to get in there, add options or via the email, do it on the show day, listeners. It's the only time we can really take those submissions. Otherwise, it's kind of cheating. All right, that means there are no winners for this week. And Mr. Jem, you didn't have a chance to lose like the rest of us last week. So we'll be nice. We'll give you a chance to go first this week. What are you feeling for this time next week from a volatility perspective, sir?
Yeah, so again, midweek, Wednesday, I'd expect to rally. Fixed strike vol has been murdered on this decline today and throughout this decline, despite the kind of the vol levels generally trending up as VIX. So if you get a rally here, I don't think it'll get, hit as bad as people might expect because it hasn't come up as much on the downside. I would shoot for a 24 or so on that rally that's Wednesday, and then or maybe even a 23 handle. But then by the end of the week, I think we're back to maybe in the 28.5 would be the closing print on Friday, despite I think the market actually being probably net a little bit lower than here after about a bunch of up and then down.
You're wising up to the challenge of this game, sir. You're right. make one vol prediction for the end of the week, and we see all this living, you can win 5 times before the final day of the week, and then you lose in the last hour of the show. It's happened to me so many times over the last decade. Just ask Andrew. I've been winning until I was losing right at the final minute. So there we go. 24 on Wednesday, 28.5. This is why I hate going last. I don't hate that. But Mr. Meatball, you weren't on, or I should say Mr. Rock Lobster, you weren't on last week, so I will allow you to go next, sir, even though your partner, the Meatball, screwed the pooch with his guess. What are you feeling this time next week?
I know it. This one's more crapshooty because how aggressive the Fed is and how people react. So I don't know. I think we're definitely going to be lower. I'm just trying to think. Jem was saying 28. I think we're going to be a little lower. I'm going to say like 26.5.
All right, 26.5. Jem's kind of leaning where I was hanging. I kind of liked where I was this week for this coming next week as well, which is 28.75. Obviously, I have to give him a little bit of breathing room. And also, you're right, we have that giant Fed event risk in place, right? Treat it like an equity event or earnings event, anything else. Once that event risk comes out, how much of that is going to come out of the balloon? How quickly will it come back in? If it's a big surprise, it certainly will. So that's weighing on the end of the week. So it makes this game so difficult, listeners. So I do like where I was hanging out, but Jem kind of was hanging out there. So I'm going to go, I'll be a little bit more optimistic than how about I will say we'll be a little bit higher. I will say 29.28. There you go. There's your mark of next week, listeners. So we got the Rock Lobster on the bottom, 26.5. Jem coming in 28.5 for Friday, 24 earlier in the week, and myself at a 29.28. Get your guesses in now. If you're listening live, get them in via the live chat. Of course, win some fabulous prizes out there if you're right. If not, listening after the fact, hit us up via @options or indeed questions at theoptionsinsider.com. All right, listeners, we ran long, but a lot of vol to talk about this week. That music means, unfortunately, our on-demand broadcast week. For all you on-demand folks, this concludes your broadcast week. For all you cool cats in the secret club, though, just hang out. We'll pump some fun stuff in if you're listening live. If you're listening after the fact on your exclusive Pro podcast feed, just pull it up there. You'll get options oddities. The Rock Lobster and I will be back in a little less than an hour now to break down the insane week that was from an unusual options activity perspective. How all of our Oatly and Hood and all these other puts, how they all doing? Let's find out. On options oddities coming up in a little bit less than an hour. But Mr. Jem, if folks are intrigued, they want to reach out to you to talk about skew or the ball surface or your favorite, Vanna and Charm, where should they go? What should they do, sir?
Yeah, so volatility.com is our website. There's an ability to ask for a meeting on our site. So if we have 3 products, long vol neutral, which is relative value, and our dealer flow products. So all kind of institutional hedge fund products that happy to talk to people about. And otherwise, you can find me at @jam_croissant on Twitter, where we're kind of musing about macro and vol on the daily.
I love it. Our chat's all over the place on their guesses. 23, half, 35 thing, all over. I love it. I love when they have a broad spectrum of opinion on vol. It makes it always fun. And Jem, I know you come to us. I know you've wanted a nickname for a while. You come to us with your Jam Croissant, but, we can't accept any outside nicknames here on the network. So we'll workshop something for you, and the next time you come on, Jem, maybe we'll see what applies. So stay tuned on the nickname front. We'll have to get you on more frequently than once every quarter or so. Then we can up the nickname frequency. In the meantime, if you're not following them, give them a follow over there on the old Twitter, listeners, at @jam_croissant. And Mr. Rock Lobster, of course, if they want to learn more about all things vol, or maybe your new Delta Neutral trading program, where should they go? What should they do?
Go to optionpit.com or call Ted, 888-TRADE-01. And again, you know what to say, right? You get 10% off anything if you tell Ted who the best-looking guy in options is. There you go. You heard it right here.
And we all know who that is, listeners. Just putting it out there. It's official. Sexiest man in options. I have been named a few times. I'm just putting it out there, just in case. So don't want to lie to Ted. Optionpit.com and tell him who the true sexiest man in options is. And, of course, you know where to go to learn more about all things spikes. MIAXoptions.com/spikes. is the place to go to learn more. They have some really cool stuff there. Not just a link to this show, which is always fun, but of course, a lot of great historical data for spikes. And they have all the shift search. We just had Saad from Vesica, who created shift search, on our Pro Q&A on Tuesday, talking about all the analytics. You guys can get there for free. Do all your unusual activity screening for free. You can't beat that. And then they even are working now with Quick Strike. So you like our TWIFO program, or This Week in Futures Options program that we do every Thursday with CME. We use Quick Strike tools in that to analyze the quick skew. To this day, I think quick skew is the best measure of skew. And it's now being applied not just to futures options, so not just to your corn and your oats and your crude oil, but also now you can get it on equities. How cool is that? So MIAXoptions.com/spikes is the place to go to begin that journey. Like I said, unfortunately, this concludes our broadcast week for you on-demand folks. For all you other cool kids, we'll see you back in a little less than an hour now for Options Oddities. And for everybody else, the fun kicks off again next week with the option block on Monday all the way through to another Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIKES Volatility products. SPIKES options and futures are traded on the SPIKES Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.